You can see time is around 6. Let's look into weekly Nifty 50 trade analysis, guys. And what you can see here is that the market on Monday, guys, showed a very huge gap up. And those people who might have sold their positions over here, here, anywhere along this way, guys, expecting the market to further sell towards the downside with this kind of huge gap up. The market targeted all those sellers who might have sold here, with this kind of huge gap up price. And the market didn't even retrace, guys. And you can see how bullish the momentum was there towards the upside. With no retracement, the market targeting all those buyers continuously moved towards the upside, guys. And what you need to remember here is that whenever you find narrow pivot ranges, guys, you can see on this day and on this day, and the gray color line over here is the pivot range, guys. Whenever you find narrow pivot range, it clearly signifies that day it's going to be a trend day. And you can see on this white pivot range, you can see how the market moved over here. And even on this day, there wasn't much momentum, but here you can see on Thursday, guys, a narrow pivot range. You can see how bullish the momentum is, and the market showing a one-sided momentum. And it always be careful whenever you have a narrow pivot range, guys. It's gonna be a trend day. And for finding the pivot range, use this indicator, a central pivot range with pivot levels by KGS. I think it's best indicator. So coming to Monday, guys, let's look into Monday's trade analysis in Nifty 50. So if you come to Monday, you can see how the market here consolidated. And with this kind of huge gap up price, the market targeted all those sellers who might have entered, as I have told you. And in case you can see here with this kind of momentum, guys, the market even broke the 200 moving average in a 1 minute, in a 5 minute time frame, as well as even in a 15-minute time frame as well. You can see, guys, this is the 15 minutes time frame. The market gapped up above the 15-minute time frame also. So usually there would be chances that the market might face rejection from 15-minute moving average and continue further selling towards the downside like this. But you can see 15-minute support over here. Again, you can see 15-minute support, 15 minutes moving average, 200 moving average support over here, rejecting, and you can see this kind of huge bullish momentum. And that's what I meant, guys. And whenever the market is gapping above the 15 moving average, the 5-minute 200 moving average, as well as the 1 minute moving average, it clearly signifies the market sentiment is going to be bullish and it's going to trend in that direction itself. But in case, guys, if you want me to ask, ask me to look into the price action over here, what I usually do is to plot the mid of the first candle. And in case if the market is trading above the mid of the first candle, above the 9, as well as the 21 moving average, as well as above the 200 moving average, and as well as above the day VWAP level, and even a 5-minute zone also. So I will look into a 5-minute zone also for better confirmation. In case if the market rejects price from these levels or takes support from these levels also, I would consider taking direction in that way. But here you can see the market showing a very good bullish momentum, guys, and there is no even retracement also. And you can see the market rate showed a bullish momentum, but here the market rejected price from these levels, guys. But if you consider this swing momentum over here, where the market broke this low over here, what you can see here is that you could have either plotted the high of this candle through the low of this candle. Once the 0.5 levels has been broken towards the upside is where you could have expected, or you could have taken long position over here. You can see there is 0.5 levels over here. And in case if you want a better confirmation, place your anchor VWAP level here. So, and you can see, guys, over here, this momentum over here where the market over here showed a very good bullish momentum over here and consolidated in a sideways manner. This consolidation is a very good sign of a very a bullish momentum. As you can see, this kind of consolidation, a clear sign of bullish momentum, as well as the market here breaking the 0.5 levels of this bearish momentum towards the downside. In case if the market sentiment would have been bearish, the market after this kind of huge rejection could have retraced to these levels, reject price from these levels, and continue further selling towards the downside. But what you can see here is that if you consider this bearish momentum, guys, there is no fair value gap, there is no imbalance, as well as there is no aggressive selling also, guys. You can see when compared to this kind of huge buying momentum, you can see this kind of bearish momentum is not strong as well. So what you could have done is to part the 0.5 levels and take once if the 0.5 levels has been broken towards the upside, and you can see on this anchor VWAP level also forming some sort of support over here. And with this candle, guys, which rejected price on 9 moving average, broke the 0.5 levels and even broke the anchor VWAP level. This is where you could have taken long position of this candle itself, guys, and keeping your stop loss just below that candle and targeting it all the way towards the downside. And for target levels, you could have used this swing momentum, the low to high of this candle, and you could have targeted the 2.6 level over here. You can see this is where you could have targeted this. Or what you could have done is you could have uh, tried your stop losses to break even or anywhere along these levels. And if you can see after this kind of huge bullish momentum is, and if you try to plot the low of this candle to the high of this candle, you can see the market retracing to 50 levels over here. This is the 50 levels where the market retraced guys. So if you consider this momentum over here, you can see this is the 50 level where the market retraced, and the market here failed to make a higher high after market rejecting price from these levels and showed a very good bullish momentum. But here the market failed to make a higher high. Instead, the market showed aggressive momentum towards the downside. But you can see this momentum towards the downside is not strong, guys. You can see there is no imbalance over here. There is no fair value gap as well as there is no aggressive selling over here. Even though you find this aggressive selling, you can see immediately the market came back into range and showed some kind of bullish momentum. And if you consider this momentum over here, the common point index to the common point index, the market rate is into 50 levels. So what you could have considered is the common point index to the common point between this. So you can see here the market rate is into 50 levels over here. This is the 50 level where market is retracing. And if you try as me to plot your angular gap level here, you can see the market over here rejecting price from these levels as well. And in case if you try to plot the fib extinction levels over here, the common point index to the common point index, so you could have targeted 100% move or the midway between, or you could target this buy side liquidity. So you can see there is a rejection of price over here. So what you could have targeted is this buy side liquidity over here. Or you can see if you consider the same momentum, if you consider this the 0.5 as well as the 0.6 level, and the mid of the 0.5 as well as the 0.6 level. And this is exactly where you could have taken long position over here and trialing your keeping trial your stop loss all the way to this level. So this is one entry where you could have taken. So rejection of price from these levels, you can see there's this anchor gap level over here. Even here the market rejected price and here also the market rejected price, clearly signifying some sort of bullish momentum. And the last down move before it broke structure towards the upside, you can see a clear market structure shift over here, guys, where the market clearly broke some structure towards the upside. You can see a clear market structure shift, or what you can consider. You can consider if you consider this momentum is, you can see a clear market structure shift. And if you consider this momentum here, you can see the market coming and activating these levels. You can see this is a clear 1 minute order block, and this is a clear sell side liquidity over here. You can see the sell side liquidity over here, where the market over here rejected price from these levels and came mitigated this order block level, and you can see this kind of aggressive momentum is. So we could have asked why the market couldn't even come and mitigate this level, but if you consider this whole momentum as single momentum is the low to the high of this candle, you can see the market coming and reaching the optimum trade entry zone also. So you can consider even in that way as well as see optimum trade entry zone where the market coming and mitigating this optimum trade entry, the sell side liquidity sweep, and suddenly the market rejected and continued further bullish. So if you ask me to plot the fib extension levels over here, the common point index to the common point index to the common point index, so you could have easily targeted the 1.68 level, and you can see guys exactly at 4.26 level is where exactly the market came here. The 4.26 level entry over here, guys, keeping your stop loss just below that candle itself, the order block candle itself, and you could have targeted it all the way towards the 1.8. I hope you're understanding, guys, how you could have traded. Look at this beautiful trade setup, guys. I have explained you beautifully why you could have taken the market reaching this 250 levels, and you can see this anchor way up level over here acting as some sort of support over here, and here it shows some kind of bullish momentum. You could have taken even here also. Once if this level has been broken, as you can see this kind of aggressive momentum towards the downside, and where the market clearly broke this structure low here. It is a clear break of structure, guys, where you can see the market retraced aggressively broke towards the downside. But what you can see here is that in case after this kind of aggressive momentum, guys, you can see immediately the market tap into this important zone over here. The zone is 250 levels over here, and immediately show some kind of positive momentum where the market even broke the 0.5 levels of this bearish momentum. You can see the market breaking the 0.5 levels of this bearish momentum towards the upside. And what you could have taken is the long position over here, keeping your stop loss just below this candle and targeting it all the way towards the buy side liquidity. This is another trade position where you could have taken, guys. And in case if you try to plot your anchor gap level here as well, you can see the market rejecting price from this levels, rejecting price from this level also. So this was another opportunity where you could have taken of this bearish setup. Immediately the market came back to zone and rejected price from the 0.5 levels and continued further bullish. So I hope you're understanding this, what I'm saying. And you can see again the market here showed a sideways momentum and aggressive selling. But here the market mitigated these levels and showed a very positive bullish momentum towards the upside. And you can see how the market came all the way towards the 4.26 level. You could have just hold it on to your trade, guys. And you could have traded based on that. And if you try to plot the anchor gap level over here, the high of this candle, the huge bearish candle, you can see after this kind of bearish setup, the market clearly broke structure towards the upside. You can see aggressive momentum towards the upside. Again, the market came retraced to this level. So if you consider the low to high of this candle, so you can see the market mitigating this optimum trade entry zone over here. This is the optimum trade entry zone, guys, where the market is coming and mitigating this levels over here. So what you can see here is this optimum trade entry zone, and as well as which is overlapping with this fair value gap over here. This is the fair value gap as well as the market rejecting price from these levels. So what you could have done is that after the market showing some respect at this optimum trade entry as well as the fair value gap, you could have plotted these retracement levels, guys, the common point between this to the common point between this. So if you consider this bearish momentum towards the downside, once if this 0.5 levels has been broken towards the upside is where you could have taken long position, guys. The 0.5 levels breaking towards the upside is where you could have taken long position, keeping the stop loss just below this 0.5 levels only. So the long position over here and stop loss just below this candle itself, guys. And you can see how you could have even plotted the anchor way up level of this swing high also. You can see with this candle over here, everything is in confluence, guys, for the market to take long position. So you could have just taken long position over here of this after this candle, guys, keeping your stop loss just below these levels only. And for target levels, what you could have done is to plot the fib extension levels of this momentum towards the upside, the common point between this to the common point between this to the common point between this. So what you could have traded is all the way to these levels over here. You can see a beautiful rejection of price from 4.26 level. I hope you're understanding this. The market reaching all the way to 4.26 level over here. You can see this kind of setup is where you could have targeted. So this was another trade setup where you could have easily targeted, and you can see this kind of huge aggressive momentum towards the upside. And if you try to plot the low to the high of this candle, again you can see the market mitigating this optimum trade entry zone over here, where the market is mitigating here is the optimum trade entry. And when you try to plot the fib extension levels over here, the common point between this to the common point between this to the common point between this, so you could have targeted another 100% move over here, or you can see the 1.68 level on the next day where the market rejected price from these levels and came all the way towards the downside. So long position over here, guys, keeping your stop loss just below this candle. And for better confirmation, what you could have done is if you could try these retracement levels towards the downside, and once if this 0.5 levels, you can see this kind of consolidation levels where the market is breaking towards the upside, the 0.5 levels. So let me the 0.5 levels where it broke towards the upside over here. You can see the 0.5 levels over here. And another confirmation is to plot your anchor gap level here. You can see the market taking support from this anchor gap level, and with this kind of bullish candle where it broke the rejected price from lower levels and broke the 9 as well as 20 and moving average with this candle over here is which clearly showing some sort of bullish momentum, just one candle stop loss and targeting it all the way to 1.68 level, or you can see. I hope you're understanding this, or you could have targeted it all the way to this level as well. So that's one possible entry you could have taken. You can see how many possible opportunities where you could have taken long position in Nifty 50, guys. I hope you're understanding. I think this definitely makes some sense, guys. And let's try to take the anchor gap levels out. Anchor gap levels are just for confluence, guys, in case just to let you know that the market sentiment is you're trading in the right direction. And on Tuesday, you can see the market over here showing a wide pivot range, guys. In case if the market sentiment would have been bullish, guys, what would the market do is that you can see the market swept this high and immediately came back to range over here, and the market would have come to this 200 moving average or the 100 moving average, the pivot level, and could have shown some kind of bullish momentum like this kind rejection of price, even though the market here showed some kind of bullish momentum when the market came all the way to this levels over here. Since there is some kind of demand over here, is the order block level, I guess. You can see the market coming here, mitigating this levels and showed a huge bullish momentum, but here the market failed to close above this 200 moving average over here. But let's look into what happened on Tuesday, guys. On Tuesday, you can see if you try to plot the mid of the first candle over here, and this is a zero point 0.5 level. And in case if you try to plot the 5 minute zone as well, in case of 5 minute zone, if you try to plot the high to low of this candle over here, and if you try to plot the 5 minute zone as well, this is the 5 minute zone, guys. 5 minute zone as well. So if you look into this consideration, you can see if you try to plot the day VWAP level over here, this is the day VWAP level. You can see there was an aggressive selling where the market swept this liquidity above the yesterday's high. It is a clear buy side liquidity sweep price, not a breakout structure. It's a buy side liquidity sweep where the market swept this high and immediately rejected price from these levels and showed some kind of aggressive momentum. And you can see how strong the bearish momentum is. Broke even the first candles low with a huge bearish candle over here. So after seeing this kind of huge solid bearish candles, guys, or even after this candle, you could have taken short position, keeping your stop loss just above that candle, or after some kind of momentum, you could have waited for retracement. You can see there was a strong selling over here, and you can see this kind of retracement. Even this is a very strong buying pressure, guys. You can see this kind of V-shaped recovery, which clearly signifies some sort of bullishness. And after this kind of recovery, guys, where the market clearly formed this, broke the structure high also, you can see a clear break of structure. And what you could have done is to plot for any demand zones over here, or the market reaching to 50 levels or the zero point 0.5 levels and continuing further bullish. So if you consider this momentum, which actually broke this high over here, you could have waited for 50 levels and continue further bullish price towards the upside. But what happened here is that instead the market showed aggressive momentum since the market failed to close above this 200 moving average as well as the day VWAP level. You can see this is the day VWAP level where the market failed to close above these levels and showed some kind of aggressive momentum towards the downside. And it came all the way to this order block level. This is a clear 1 minute order block, guys, where the price rejected from these levels over here. But what you can consider is that when you consider this impulsive momentum with this kind of aggressive momentum towards the upside, this is very strong, guys. So what you could have done is to plot the common point between this to the common point between this. Would have plotted, and you can see the market here rejecting price from 550 levels as well. So this is the 550 level where market is rejecting price from these levels, and this break of structure you could have considered it to be a buy side liquidity sweep over here. So this is a buy side liquidity sweep where the market swept this fair value gaps over here and rejected price and again sold towards the downside. But this momentum, guys, this aggressive momentum here failed to make a lower low. Instead, the market rejecting price from these levels, and again you can see the market coming all the way to these levels. But here you can see the sweep in liquidity. Since this is the high, guys, you can see this is a buy side liquidity sweep over here where there is fair value gap above here. You can see this kind of 200 moving average support, rejection of price as well. So what you can consider is this fair value gap over here, guys, and this 200 moving average price rejection. So after seeing this kind of rejection and with this candle over here, as you can see, this candle over here breaking the rejecting price from this levels over here, the 200 moving average rejection, the day VWAP level price rejection, you could have either taken short position over here, keeping your stop loss just above that candle and targeting this liquidity over here, this sell side liquidity over here. So this was one trade opportunity where you could have taken, keeping your stop loss just above that candle itself and targeting it all the way to this sell side liquidity. You can see this was a very good opportunity for you to take sell side liquidity over here. Or what you could have done, guys, is with this kind of, after this kind of huge bullish candle, followed by another bearish candle and another rejection candle, guys. With this candle itself, you could have taken with a better risk to reward ratio and targeting the sell side liquidity over here. So this was one good opportunity for you to trade this momentum towards the downside, where the market rejecting price from this 200 moving average and this bearish candle, as well as this dodge price rejecting from mine, as well as the 21 moving average. And after, you can see, guys, the market grabbed this sell side liquidity and showed some kind of huge bullish momentum where it mitigated this fair value gap, as well as it came all the way to this 50 levels over here, sell side liquidity sweep, and showed some kind of huge aggressive momentum. But this is not an aggressive momentum, guys. Aggressive momentums are a huge impulsive candle. But you can see how the market consolidated, making a higher high, higher low, and after this the market tried to move towards the upside. So what you can see here is that the rejection of price from these 50 levels, again aggressive selling, again the market rise, You can see there was a fair value gap over here where the market swept the sell side liquidity over here. Again, rejecting price from this levels over here and again show some kind of bullish momentum. But what you can see here is that the selling pressure is not even as strong, guys. You can see this kind of selling pressure. But here the market made a failure swings as well, which is not even as strong, bearish momentum as well. And even the market here, you can see the market clearly broke this structure low as well. Or you can consider this momentum as well, guys. If the market broke and you can see retraced but failed to cross above this 200 moving average over here. So what you could have done here, guys, is that we can see there is a lot of confluence over here, guys. If you ask me to plot a box setup over here, one is that, guys, if you consider this huge bearish momentum over here, the height of this candle, this zone lies at the 350 levels. So this is exactly at 350 levels, guys. So this box over here, and the first black line is the day VWAP level, and the middle one line is the 200 moving average, and the lower black line is the Monday's VWAP level, guys. So you can see here the market rejecting price from these levels and breaking towards the downside, and this huge bearish candle, guys, over here broke the rejecting price from this day VWAP level, broke the 20 moving average, then as well as the 21 moving average towards the downside, clearly signifying bearishness. So after this kind of break, guys, where the market clearly formed a clear chop formation, what you could have done is to wait for some rejection of price, or you could have taken short position immediately after that candle itself, or you could have waited for some sort of retracement, guys. So you can see the market came all the way to 0.38 level, rejecting price from this levels and continuing further selling. So either after this kind of candlestick formation, which happened both in Nifty as well as Bank Nifty as well, you could have targeted it all the way towards the downside. And for target levels, what you could have used is this the low of this candle to the high of this candle. You could have used the projection levels. So projection levels from high to low, guys. So from high to low. So what you could have considered is the 2 -2 level. But you can see the market coming all the way to this level, so guys. Or you could have just hold it onto your trade. Or let me give this kind of significance, guys. It's better to give fib extinction levels in this way only. The common point written is to the common point written is to the common point written is. You can see the 1.68 level. Or in case if you try to plot the mid of the 1.68 as well as the 2.6 level, you could have targeted somewhere along this levels, guys. Or you could have just tried your stop process. So I think 1.68 level is a better risk to reward ratio. You can see the market after these levels consolidated in a sideways manner. I think there would be a premium decay if you could have plotted this kind of momentum. But during this wide pivot range, guys, there would be no clear price action where the market would be here. And you can see how the market is targeting both buyers and sellers, sweeping both liquidity of buyers as well as liquidity of sellers. Swept this liquidity, came back to range, swept this sell side liquidity and came back to range. Again, swept this buy side liquidity. You can see there is another buy side liquidity over here where it broke this 200 moving average towards the upside. This buy side liquidity and came back to range. Sell side liquidity came back to range. I think when you see this kind of liquidity sweeps and the market trading in a sideways manner, you can see it's a clear sideways manner with no clear or proper momentum. But only after this momentum, as you can see, where the market actually sold towards the downside and a single candle over here breaking both the daily wrap level, the anchor wrap level, the Monday wrap level, the 9 as well as 21 moving average, clearly signifying bearishness. And in case if you try to even plug the anchor wrap level over here, see the anchor wrap level also being broken towards the downside, clearly signifying bearish momentum, guys. So I hope you're understanding what I mean. So you could have just traded and you could have tried as long as the market is trading below the 9 as well as the 21 moving average. And you could have just hold it on, guys. And you can see there is no clear price action over here where you could have just ignored it, guys. And this is about Tuesday's trade analysis. And now coming to Wednesday, guys. On Wednesday, let me take this Tuesday's day VWAP level and Monday's VWAP level definitely will help in you making certain decisions, right? So I think definitely you should try to keep Monday's VWAP level as it is. And this is the 200 moving average as well as the 9 as well as the 21 moving average also. You can see yesterday there was some kind of bearish momentum base where the market was aggressively selling towards the downside. And what you could have seen here on Wednesday, the market after this kind of huge selling pressures, a lot of sellers who might have entered, the market targeted with a gap up. And if you ask me to plot the mid of the first candle over here, so This is the middle of the first candle is, and if you ask me to plot the 5 minutes one as well, the low to high of this candle over here. So this is the 5 minutes one as well. So this is the 5 minutes one guys. You can see. So let's plot it here in the same. So if we consider the low to high of this candle, you can see this is the 5 minutes one as well. So let's look into a 1 minute time frame and see. Let's extend towards the inside guys. You can see here the market clearly showing a bullish momentum. Here the market clearly trading below the 5 minutes in, but here there is a white pivot range. The market rejecting price from these levels. Since you can see guys, here is where there is some sort of selling pressure happened yesterday with this kind of huge bearish candle, and you could have expected the market to even show some kind of bearish momentum as soon as the market entered this position over here. So what you could have done is that you can see this kind of huge bullish momentum where the market showed a positive bullish sign guys. So if you consider the common point, the compound in this to the compound in this, so you can see the market rejecting from the, or if you try to plot the daily wrap level, you can see here the market taking support from the anchor daily wrap level. This is exactly where you could have taken position, keeping your stop loss just above candle and targeting this buy side liquidity over here. Or you could have targeted it all the way to this zone over here where there was an aggressive selling. This was one momentum you could have captured this in case if you could have entered long position over here. You could have definitely showed, you could have targeted it towards the upside. And you can see after this, the market showed a very aggressive momentum. Again, market failed to break this level towards the downside, or even market failed to break above below this low as well. And again, the market taking support from these levels and continue and reach the zone over here. This is the 50 level zone, or this is the zone where there was aggressive momentum towards the downside happen. And what you can see here is that as soon as the market reached that some you can see there was an aggressive momentum where the market clearly formed a market structure shift rise. Or you can consider this to be a chop formation. After this kind of huge selling pressure, you could have marked the day anchor gap level over here, and as well as the common point between this to the common point between this, and you can see how the market retracing all the way to this 50 levels over here. The market retraced to 350 levels as well as rejection of price on 350 levels as well as rejection of price. You can see this candle over here. After this kind of huge bullish momentum, this candle mitigating the fair value gap, the 350 levels, rejecting price and closing below this range, guys. Rejecting even from the anchor gap level between your moving average and moving average, clearly sitting from bearishness. And what you could have done is to take short position over here, keeping your stop loss just above that candle itself. And for target levels, you could have plotted the fib extinction levels, the common point between this to the common point between this to the common point between this. So what you could have targeted is this 100% move. You can see since there was a huge candle over here, so you could have targeted the 100% move over here. You can see the market almost came to this 100% move. And targeting it all the way to this levels over here. And after this price, you can see the market taking support from this 200 moving average. You can see whenever we find 200 moving average line and the market showing some sign of bullish candles, you can see the market immediately after this bearish candle, you can see followed by another bullish candle closing above this 200 moving average, clearly showing signs of bullishness. In case after this kind of support, if the market showed some kind of bullish momentum where the market aggressively breaking above these levels, you could have considered the market sentiment to be bullish, guys. But you can see after this 200 moving average support as well, you can see this kind of liquidity, guys, which the buyers are not strong enough, and you can see this kind of liquidity where there is no fair value gaps, there is no imbalance, no aggressive buying or selling pressures here, and the market is forming a clear trendline liquidity after some kind of aggressive momentum towards the downside. You can see this kind of aggressive momentum, and if you try to plot the common point in this to the common point in this, you can see there is a fair value gap over here, guys. So if you ask me, definitely there is a fair value gap over here. You can see fair value gap over here, which overlies with this optimum trade entry zone. So let me plot it. The optimum trade entry zone over here, as well as this fair value gap over here. You can see both overlying with each other, guys. And in case if you ask me to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, so you could have targeted it all the way to 1.68 level over here. You can see how beautifully the market came all the way to 1.68 level. And after this, the market again rejected from price on these levels. So what you could have done is targeting over here is the short position over here. keeping your stop loss just above this candle over here. So if you ask me to take this anchor gap level, you can see rejection of price from this anchor gap levels. Or what you could have done is to plot another anchor gap level here, guys. And you can see this candle over here, this bearish candle over here is broke the anchor level towards the downside. Either you could have added on to your position here as well. This candle over here, keeping your stop loss just above that candle is and targeting it all the way to 1.6 level over here. You can see adding on to your winning trades, guys. This is what it means. And you can see this kind of huge bearish candles over here. And if you ask me to try to plot the compound returns to the compound returns, you can see the market reaching all the way to this 50 levels over here, where the market mitigated this 50 levels and rejection of price from this 200 moving average as well. This is the 50 level, guys, where the market over here rejecting price from this 200 moving average. You can see this 200 moving average where it found a support over here. Now it can act as a resistance. And after this kind of aggressive downward momentum, you can see the recent strong momentum. So what you could have plotted is anchor gap level here. Once if this 0.5 levels has been broken towards the downside of this retracement, guys. So the count point in this. So the count point in this. Once if this 0.5 levels has been broken towards the downside, and as well as the anchor gap levels also being broken towards the downside, you can see this is exactly where we could have taken another short entry over here, keeping your stop loss just above that candle, and for and your anchor gap level here is the last up momentum, or you can consider this is the last up momentum. You can see the market over here rejecting and coming towards the downside. So for target levels, you could have plotted this with extinction levels, guys. The common point within this to the common point within this to the common point within this. So you could have targeted another 1.68 level over here. I hope you understand this. Exactly at this momentum is where you could have targeted another 1.68 level towards the downside over here. So I hope you're understanding. One bearish momentum, another bearish, and immediately after this kind of aggressive momentum, price rejecting from these lower levels, you can see clear sell side liquidity sweep over here. You could have marked this sell side liquidity beforehand itself, and as soon as the market swept this low and immediately came back to range over here, the market showed some kind of bullish momentum. So as soon as this candle exiting your short position, you could have definitely taken long position, keeping your stop loss just below that candle also. Definitely there are possibilities for you to enter in that way also, guys. So after this kind of huge bullish momentum, what you can see here is that if you try to plot the common point between this to the common point between this, the market retraced into 0.38 level and rejecting price and even broke but failed to cross above this 200 moving average over here, guys. So let's take this anchor gap levels out. Failed to cross above this 200 moving average, again rejecting price and came all the way to this levels, guys. So here if you consider this momentum towards the upside, where the market reaching all the way to this optimum trade entry zone over here, optimum trade entry zone over here, and showing some kind of bullish momentum. This is another optimum trade entry zone. After this kind of huge aggressive momentum, where the market over here, there is a fair value gap as well. As you can see, the market mitigating this fair value gap as well. So the market mitigating this fair value gap as well as optimum trade entry. You could have either taken long position here, or you could have waited and keeping your stop loss just above this candle and targeting all the way to this buy side liquidity over here. So above this candle is where you could have taken. So since there is a buy side liquidity over here, as well as there is some fair value gap above as well. So what you could have targeted is this fair value gap above this liquidity. So you can see that exactly the market came all the way to this fair value gap. So you could have targeted it all the way to this level only. So I hope you're understanding it. You could have just scalped here also after seeing this kind of huge, the market sweeping this, rejecting price on these lower levels and coming back to range. But this is some kind of aggressive entry, guys, in case if you could have entered long position over here, but definitely this is not an aggressive entry. After this kind of huge bearish candles, you can see the market halted here and showed some kind of bullish momentum, or after this candle, huge bullish candle, you could have taken long position, keeping your stop loss just below that candle. Even that is also possible. You could have made some decent profit as well, guys. And this is about Wednesday. Coming to Thursday, as Thursday there was expiry also. And what you can see here on Thursday is guys. So let's we take this Tuesday's day VWAP level, and this Monday's VWAP level definitely will play some sort of significance. You can see here the market, guys, on Monday's VWAP level clearly rejecting price from this VWAP levels over here and showed some kind of bearish momentum. Immediately after this kind of huge bearish candle, where the market over here is trading below the 5 minute candle over here, mid of the first candle over here, as well as if you consider this 5 minute zone as well. So if you ask me to plot the 5 minute zone as well, this is the 5 minute zone, guys. So this is the 5 minute zone. Whenever you find a narrow pivot range, guys, it clearly signifies that day it's gonna be a huge trend day. And if you zoom out and see, you can see how the market here showed a very good bullish momentum towards the upside. But before that, what we need to see is to plot the daily up level and see how the market here behaves. You can see the market here found some sort of support. Here, the market also is showing some sort of support. Here, the market is rejecting price from this VWAP levels. So you can see after this kind of huge bearish candle is, and where the market rejected price from this Monday VWAP level and closed below this 200 moving average, and rejection of price from these levels, the anchor VWAP level as well as the 200 moving average, and the second candle also rejection, guys. What you could have done is to take short position, keeping your stop loss just above that candle and targeting the sell side liquidity, guys. So the next clear target was this sell side liquidity over here. You can see a clear sell side liquidity is where you could have targeted, and exactly towards the downside is where you could have targeted, is keeping your stop loss just above that candle itself. So this is one momentum, bearish momentum, where you could have targeted. And you can see the market here consolidating in a sideways manner. And you can see the market rejecting price from this anchor VWAP level. So here you can, this is the day VWAP level, right? You can see the price here rejecting from day VWAP level as well as the 21 moving average as well as the 200 moving average above here. Everything is in confluence over here where price is rejecting. And you could have entered short position here, keeping your stop loss just above that candle and targeting it all the way towards the downside. This was one trade opportunity where you could have taken. And what you can see here is that the market swept the sell side liquidity area and immediately came back to range high. And where the market here broke structure towards the upside, you can see. So some kind of positive momentum. Again, the market here saw some kind of bearish pressure, but here the market failed to make a lower low. Instead, the market broke structure towards the upside. You can see this last up candle before it broke structure. You can see, you can consider this to be a clear break of structure. So what you can see here is that after this candle over here, guys, you can see there is a fair value gap over here. Or what you can see is that if you consider this bullish momentum, the common point between this, to the common point between this, what you could have done is to plot the 50 levels over here. This is the 50 level where you could have expected that market retracing to these levels and further continuation of price towards the upside. And along with, you could have plotted the anchor VWAP level, and you can see the market rejecting price from these levels and came back to range. So if you consider this bearish momentum, is if you try to plot the high to low of this candle, you could have marked the 0.5 levels over here. You can see this is the 0.5 levels where market is rejecting price from these levels and continue. So what you could have done is to enter long position here, keeping your stop loss just below that candle itself, guys. Below this candle itself and targeting it all the way towards the upside. And for target levels, you can plot the fib extinction levels, the common point between this to the common point between this to the common point between this. So you could have targeted it all the way to 3.6 level over here. This is the 3.8, or you can 3.6 level, or you could have targeted it to 4.6 level as well. But the market didn't come. You can see, guys, how aggressive the market was. It showed a very positive momentum. I hope you're understanding how I told, guys. You can see even this also was quite bearish, guys. But as soon as the market reached this fair value gap over here, the market showed some kind of bullish sentiment and kind of consolidated here. And if you try to plot these fib levels, retracement levels, this is what I mean, guys. So you could have, in case if you might have missed out on this, guys, what you could have done is to plot this fib levels over here. You can see the market after this kind of huge aggressive momentum again retraced to this 21 moving average over here, and you could have expected the market to continue further bullish, guys. But what happened is that the market failed to make an higher high here. Instead, the market broke structure towards the downside, guys. You can see a clear chop formation over here, indicating the market sentiment to be bearish. And after this kind of chop formation, you can see if you try to plot these levels over here, it is a clear buy side liquidity sweep of this buy side liquidity, again the market coming all the way to these levels. So what you can see is that if you consider the low to common point between this to the common point in this, you can see the market reaching all the way to this optimum trade entry zone. This is the optimum trade entry zone, guys, where we could have expected the market to reject price from these levels and continue further bullish. But you can see the buy side liquidity sweep over here. And what you can see is that if you consider this bearish momentum over here, and if you try to plot the optimum trade entry levels over here, you can see this is the optimum trade entry, where you can see the market rejecting price from these levels and continuing further. But here the market, this is the day VWAP level, guys. What you can see here is that let's take this out over here. You can see this is the day VWAP level. And when compared to this kind of huge bullish momentum, this aggressive momentum is not strong, guys. In case the market would have been strong, guys, the market would have swept this previous swing high, guys, high resistance liquidity sweep. The market would have swept this high and aggressively sold towards the downside. Only then we can consider this momentum to be a strong momentum. But what happened is that this is a failure swing, guys. This is a low resistant liquidity sweep where the market failed to sweep this liquidity above and formed a failure swing. So there is a high probability that this failure swing will be broken. And this doesn't signify the market sentiment to be a strong aggressive selling, guys. But what you can see here is that the market had to go mitigate these fair value gaps, again reject price from these levels and consume all those liquidity over here. But this liquidity, the selling pressure is not strong enough where the market showed some kind of bearish momentum but failed to make break these lows over here. As you can see, this kind of huge consolidation where the market failed to close below these levels. But and you can see after this kind of again the market after this kind of bearish momentum here, you can see a clear break of structure here. This is another clear break of structure. A clear break of structure, guys. And if you consider this swing momentum, the high of this candle to the low of this candle, you can see the market retracing to 550 levels over here. You can see this is a clear 550 level, guys, where market retraced, it rejected price from these levels and continued. But what happened is that the market failed to make a lower low. Instead, the market, guys, if you consider this swing momentum, bearish momentum over here, if you consider this towards the downside, aggressive momentum towards the downside, here you can see the market breaking this zero point 0.5 levels towards the upside. You can see this is the zero point 0.5 levels where the market has been broken towards the upside. And if you try to plot your anchor gap levels here, or it's better to plot here, guys, we can see with this candle over here, guys. Better let's discuss into a candle theory. You can see this candle over here breaking the 200 moving average, the 9 as well as the 21 moving average, and closed above these levels. When you plot such candles, guys, this is exactly where you could have entered long position, keeping your stop loss just below that candle itself, guys. And what you could have done is to target towards the upside. And in case if you try to plot the fib extension levels of this swing momentum, the common point between this to the common point between this to the common point between this, you could have targeted it all the way to 1.68 level, or in case if you consider this swing momentum over here, the 0.5 levels of the 1.6 as well as the 2.68 level is where you could have targeted it. So short position here and targeting it all the way towards the upside. So I hope you're understanding, guys. So this is how you could have easily targeted towards the upside. And you can see this kind of consolidation, and even this consolidation has been broken towards the upside. And you could have traded as long as the market is trading above the 21 moving average. There's a red color line over here. As long as the market is trading above the 21 moving average, you could have easily traded long position. And you can see the support over here as well, that the market is taking the day VWAP level support as well, clearly signifying bullish momentum. Or once if these levels has been broken towards the upside, also you could have taken long position, right? So this was one trade opportunity here you could have taken, and you could have just holded on. And you can see you could have traded it all the way, guys, trialing your stop losses as long as only after this candle over here is where it broke the 21 moving average towards the downside, you could have exited it here. And what you need to remember is that whenever you find a narrow pivot ranges, guys, you go and definitely predict that the market is going to be a trend. You can see a one directional momentum, guys. You can see this was one narrow pivot range. This is another narrow pivot range, and both these days, guys, a huge rally in one directional move. And you can see this is a wide pivot range, guys. And when you see this kind of wide pivot range, and let's mark the Monday's way up level over here, you can see the market even broke this Monday's way up level towards the upside as well. So what you can see here is that there is no clear price action over here. Is what I want to see is there is no point in you trading this trade only on Friday. The market during this wide pivot range, guys, you can see there is a huge wide pivot range over here where the market kind of consolidated in a sideways manner. But what you can see here is that The market showed some kind of bearish momentum, sweeping this low over here, but immediately came back to range. And you can see this kind of sell side liquidity where the market swept here, guys. You can see a clear sell side liquidity sweep over here. The market aggressively sold and immediately came back to range. And you can see a clear break of structure towards the upside. You can see the market over here, guys, broke this towards the upside and breaking this 200 moving average towards the upside, clearly signifying some sort of bullishness. So if you consider this bullish momentum and try to plot the common point between this to the common point between this, you can see the price respecting this fair value gap as well as this optimum trade entry zone, guys. So this is one optimum trade entry zone as well as the sell side liquidity sweep also here. You can see this is a clear sell side liquidity sweep where the market swept this low, mitigated this optimum trade entry zone and showed some kind of bullish momentum. So this is where you could have taken long position, or in case if you want to have missed on, you could consider the common point within this to the common point within this, and you can see you could have taken support from this 50 levels over here and continued further bullish. Either you could have taken your long position over here, guys, or what you could have done is that if you consider this bearish momentum towards the downside, so what you could have considered is that to plot the common point within this, a common point within this to the common point within this, and once if the zero point 0.5 levels has been broken towards the upside, is where you could have taken the 0.5 levels being broken towards the upside is where you could have taken a long position over here. So long position over here, keeping your stop loss just below this candle itself and targeting it all the way towards the upside. You can see there is a fair value gap over here. So you could have targeted this fair value gap over here. You can see there is another buy side liquidity sweep over here. So if you consider this is sell side liquidity, yes, but here you can see above these liquidity levels, there is a buy side liquidity where the market swept this. So this was one target. Again, the market came to support from this 200 moving average. Here you can see market taking support from this 200 moving average. You could have taken another long positions over here, as well as this 250 levels also, keeping your stop loss just below this candle and targeting it all the way towards the upside. This liquidity zones above as well. So this was one opportunity, guys, where if it had taken trade with a small stop loss is where you could have taken. But you can see even after showing some bullish momentum, the market again coming back to range. Even after showing some kind of bullish momentum, the market coming back to range. So there is no clear directional basis, but definitely you could have made some decent profit in case if you might have followed a good risk to reward ratio and traded based on that, guys. So I hope you understand, guys. In case if you find my videos helpful, please like, share, and comment. Share with your friends and family as well, guys, and keep supporting my YouTube channel. In case if you wanna keep in touch with me, guys, Instagram is a way to go. So definitely you can message me over there. Anything regarding to trading, I would definitely help you out, guys. Thank you.